If you are tired of getting trapped in fake breakouts and stop loss hunts, then this video is for you. Hey traders, welcome back to the channel. Today, we are going to talk about one of the most powerful concepts used by smart money liquidity sweep. By the end of this video, you'll understand what liquidity sweep actually is, why the market traps retail traders, and how you can use it to take high probability entries. So make sure you watch till the end.
What is
liquidity? Before we understand liquidity sweep, first we need to understand liquidity. Liquidity simply means orders in the market. Where do most orders sit? Above highs, buy stop orders. Below lows, sell stop orders. Retail traders usually place stop loss below support, stop loss above resistance. And guess what? Big institutions know exactly where these orders are.
What is
liquidity sweep? A liquidity sweep happens when price moves above a previous high takes buy stops, or moves below a previous low takes sell stops, and then quickly reverses. This is also called stop loss hunting. Fake breakout. Smart money pushes price into these zones to collect liquidity, then moves the market in the real direction. Why market does this? Big players cannot enter trades with small orders. They need huge liquidity. So what do? They push price to areas where retail traders are trapped. Trigger stop losses. Collect those orders. Then boom, market reverses. That's why most traders lose money. They enter late exactly where smart money exits. Types of liquidity sweep. Buy-side liquidity sweep. Price breaks previous high. Retail traders think breakout. Then price reverses down. Sell-side liquidity sweep. Price breaks previous low. Retail traders think breakdown. Then price reverses up. How to trade liquidity sweep? Here's a simple step-by-step strategy. Step 1. Identify equal highs or equal lows. Step 2. Wait for price to sweep that level. Step 3. Look for rejection, strong wick or engulfing candle. Step 4. Enter in opposite direction. Entry after confirmation candle. Stop loss above or below sweep high or low. Target previous structure or next liquidity zone. Common mistakes. Avoid these mistakes. Entering before sweep happens. Trading without confirmation. Ignoring trend direction. Overtrading every sweep. Remember, not every breakout is fake. Pro tips. Combine with RSI or VWAP for better accuracy. Focus on higher time frames for stronger. So traders, this is how liquidity sweep works. If you master this concept, you can stop being trapped and start trading like smart money. If you found value in this video, like the video, subscribe to the channel, and comment smart money. I'll see you in the next video.